Now, globally, consumers are increasingly choosing vehicle subscriptions to manage finances better and purchase cars that may not necessarily they can afford on the go. Now, this financing method is yet to catch on in Africa, but with the rise in inflation and fuel price hikes, could we see a change in consumer habits? For more on this, we're joined by Tinashe Ruzani, the CEO of FlexClub. Tinashe, thank you for making the time, and thank you for joining us. Quickly, consumer habits, and I want to first understand how FlexClub comes up with this model. But do you believe that this is something that can be replicated outside Southern Africa into other parts of the continent?
Thank you for having me, Arnold. Absolutely. I think the fundamental question that we're looking to confirm is whether the auto industry is going to move towards an access-driven model versus one that prioritizes retail or prioritizes unit sales. And naturally, we think that that is definitely the case. And we think that even in other parts of sub-Saharan Africa, or more broadly, the rest of emerging markets, that there's an opportunity for access-driven mobility to be the model that dominates in the long term. So our business is really focused on providing leasing companies, rental companies with the technology that they need to accelerate that evolution, ensure that their customers can easily access vehicles in just a few clicks online and get those vehicles delivered to them, and ensure that they can access those vehicles for just a monthly fee instead of having to shell out a large upfront cash lump sum to purchase a vehicle.
Okay, there's an issue of trust, first of all, in many markets. There's a lack of consumer data or understanding consumers as well. So how will this work? How will this scale out?
Yeah, so for us, I think what we're seeing is naturally we look at what's happening in other markets like the US, like across Europe, as far as the evolution of subscriptions. I think what we're finding is that the distribution of subscriptions online is far simpler than trying to distribute loans and all the ancillary products related to auto insurance, maintenance plans, etc. So the natural evolution of this is that it's distributed by larger brands. To give you some context, our largest customer or merchant that is using our technology is Avis in South Africa, and they're using that platform to now offer their subscriptions to consumers online, where consumers have an inherent trust of the Avis brand. They're now knowing that they can power that access to vehicles with their FlexClub accounts. And it's all digital, online, in just a few clicks, complete the process, and you can order the vehicle without having to go through the cumbersome steps of searching for the car you want, applying for a loan, applying for the insurance, and maybe applying for or negotiating the maintenance plan associated with that. So we think that the simplicity will inherently create that trust to allow more consumers access, and obviously reduce a lot of friction in the process that otherwise would be there if we were only reliant on cash purchases or loan purchases.
I have to play devil's advocate here, and I want to use examples of what I would call similar but not same companies that have tried to scale in the continent. And those are largely fintech companies that are doing loans, small loans. Now, when you look at their loss-making models, or what have turned out to be loss-making models, many of them may not see or have not been able to see 3-4 years light down the road. So how do you hope that this methodology with something like FlexClub is sustainable, not only for FlexClub itself, but also for your partners?
Yes, I mean, I think the first thing to recall is that actually these asset-driven or access-driven models are not inherently new. For many decades, different groups or constituents of the economy have accessed vehicles. Companies most notably have been known to lease their vehicles. I think the question really is the underlying infrastructure required to power an access-driven model available in the different markets? And if so, can they actually reliably and sustainably provide access to vehicles to consumers? And if the answer is yes, then we don't think that this is just a short-term blip. This is a long-term trend that can be sustained, provided that merchants are out there with that infrastructure. And we think that there are a number of leasing companies and rental companies across the African continent that have the capability to run a program like this or power a product like this. So it is quite different to, I guess, some of these new micro loan or alternative lenders as far as financial services are concerned. Yes, the use of alternative data in screening the risk profile of a customer is an opportunity that exists for many businesses across Africa, but the underlying model is, number one, inherently secured because there's an asset there. And number two, is built on top of infrastructure that had already been tried and tested as far as leasing and rental is concerned.
So definitely there's someone behind who will guarantee that security. But I want to go to something that's on your website that says vehicle subscriptions are the future. Think beyond ownership and traditional financing with an all-inclusive single monthly payment. Could you expound on that?
Yeah, so what we tried to do was ensure that the simplicity of the checkout journey was there. When someone is shopping online, we now like to say it's as easy as ordering a meal on Uber Eats, for example. Just a few clicks, you can actually get the car to you versus the cumbersome process of trying to buy it with a loan, for example. So, and in this case, everything is included, meaning there's no need to sort out additional insurance. There's no need to purchase additional maintenance plans. It's all factored into that single monthly cost. So the total cost of access is comprehensive. And that's exactly what we mean there, that you can shop for the vehicle you're looking for, knowing that everything's included in just a few clicks, get that vehicle to your door in under a week. And that really is the magic of subscriptions that we've seen really take hold because of this increased convenience for the consumer.
I need your personal opinion outside this, and I think this is something that ties into your methodology or business model. Something that happened to one of the startups first, the whole one-click checkout. How far out is that technology from being universal for everyone?
Yes, I think Fast is obviously a very different business. There is another player. I think you can argue that it comes down to strategy and focus, but there is another player in the one-click ecosystem called Bolt that is doing well as far as their business metrics are concerned. Now $14 billion valuation. They focus specifically on targeting larger merchants, larger enterprise versus the strategy of Fast, focusing on micro enterprises or much smaller enterprises. And I think at the end of the day, is there an opportunity for technology to play a role in improving access to assets, improving access to products and services? The answer is yes. Is there a role, for a player like us to embed our technology in the checkout flows, of merchants like Avis or manufacturers? We now have motorcycle manufacturers like Bajaj and Italica using our platform to power their subscription. So this is not something that's limited to cars. Even for vehicles that are two-wheel, there's an opportunity for subscriptions to play a role. And we think that, there's an opportunity for embedded technology to really accelerate that evolution across the globe, including on the African continent.
Look, I thought we were running out of time, but I've been given 2 more minutes with you. So I just wanted to understand probably what your funding model is and your go-to market model. Let's start with your funding model. How are you financing this?
So we are a venture-backed business. Importantly here, to be clear, we're not lending out money to anyone. We're not, providing capital to anyone. Really, what we're looking to do is ensure that for a leasing company or rental company, they can power a simpler, subscription experience. And we are venture-backed to build the technology to power that. And most of our investors are venture capital firms that have obviously a track record of backing early-stage technology businesses. And that really is our primary sort of capital driver. And looking to continue to accelerate our ambitions here, hiring more engineers and product people to build that technology that will enable more leasing companies and rental companies across the African continent and beyond. We also operate in Mexico to now power their acceleration towards subscriptions as a new exciting product category.
Are you going to be raising anytime soon? And if it's not secret, what's the valuation at the moment?
So we don't typically talk about valuation. I think when the time is right, we'll be sure to make sure that it's more widely known. But being an early stage business, we're always building new relationships with investors. I happen to be in San Francisco right now, which is not my home base, but because we're also taking the opportunity to meet with investors and the broader sort of community out here to power the next phase of our strategy. So yes, fundraising is always a continuous motion that we have as an early stage business.
What are the markets that you're thinking of expanding to outside South Africa, of course, where you're traditionally based? Which other African markets do you think are enticing for this kind of business model? And what's your go-to business model potentially in those markets?
Yeah, so first of all, for us, we are definitely still focusing on establishing more depth in a market like South Africa. We've started testing a market like Mexico, where it's currently 15% of our transaction volume. We're supporting a number of leasing and rental companies in Mexico as well, partly in partnership with Uber, where we're helping Uber accelerate access to vehicles for their community of drivers across both South Africa and Mexico. Obviously there's an opportunity even in that segment, for us to do this in other parts of Africa, where the notion of ride hailing is now well established. Ride hailing drivers also need access to vehicles. But for the moment, we are focusing on establishing more depth. Naturally, when the time is right, we'll look at markets like, of course, Kenya, Nigeria, and the rest of the African continent, particularly Egypt, where there's obviously a reasonable number of customers looking for access to vehicles, whether for work or whether for personal use.
Challenges, I'm not talking about the ones that you're trying to solve, but challenges that are in the marketplaces that you want to get into. What are those that your market research has shown you, and what could be the potential solution for those?
Yeah, so I think that the first is really, the awareness of, the local market, so as far as the rental companies and leasing companies are concerned, how aware are they of the opportunity that sits inside products like subscriptions? Because obviously we wouldn't lean into a market unless there were merchants there that we could work with and power their own products. But then secondly, on the demand side, awareness of the opportunity with subscriptions and leases more broadly, the idea that you can access a vehicle versus having to, take debt to own one, and maybe building towards this idea where you're trying to build equity in a vehicle. So I think there's a transition, away from that sort of perspective towards a model where, folks can access a vehicle. That requires, more consumer education, and we've been investing in that, especially in a market like South Africa, to drive that evolution and understanding.